The bearish fourth quarter in small caps and the strong recovery in the first quarter has really been quite a ride. And so it's reasonable for investors to say, well, where are we now? What does Royce think in terms of where we are in the small cap cycle and what might be coming next? So first, let's analyze the first quarter. And we think if you drill down based on 4 parameters, a pretty clear picture emerges. The 4 parameters that we use are style, then operating income, then dividends, and finally beta or market sensitivity. In each of those 4 comparisons, what's generally viewed as the riskier parameter was the one that rewarded. So growth stocks outperform value stocks. Stocks without earnings, without operating income over the last year, what we call non-earners, outperform companies with earnings. Stocks without dividends outperform stocks with dividends, and stocks with high beta or high market sensitivity outperform those with low sensitivity. What does that foreshadow about going forward? Well, given that this seems to be a broad and classically patterned rebound, and it indicates to us we may have further to go. So then the question is sort of how far? And we look to history to give us some guides. So we did had over a 20% decline in the second half of last year in small caps. And there have been 10 times prior to last year where you had a 20% decline, at least, in the small cap market. What happened next? Well, in 9 of those 10 periods, you had a strong reversal. If you had bought the first day after that 20% decline, you would have made money a year and 2 years later. The only exception with 2008, 2009, 2010 period. And to be clear, we don't think we're in anything like that. But to be more precise about it, if you look on a 2-year period, 8 of those 9 periods of recovery were over a 30% advance. How does that compare to today? Well, if you look at mid-December, which was the period where last year we got to that 20% decline, we only have a small double-digit advance since then. This also is confirming evidence to us that we think it's more likely the small cap market has room to run. Well, what do we think would lead? And in a word, cyclicals. Our reasoning for this is twofold. The first is around valuation. Now, our preferred valuation metric at Royce is something called enterprise value to earnings before interest and taxes, or EV to EBIT. It's really analogous to PE ratio that's more common, but we think it's more robust in that it includes the debt a company has. So what does that metric tell us about cyclicals? Well, if you look over the last 20 years and the relative valuation of cyclicals to the rest of the small cap market, cyclicals today sell at a cheaper relative valuation than they did in the fall of 2008. And recall, that was a period where people were actively talking about a repeat of the Great Depression. We don't think we're in anything like that situation now. But that relative valuation gives some insight into how much pessimism and negative investor sentiment is reflected in current valuations of cyclicals. We think that creates opportunity. What's the second reason we're optimistic? We, in the first quarter, began to see the signs that other investors are beginning to seize this opportunity. There were 4 specific cyclical industries that notably outperformed the overall small cap market, even during a time where people were still discussing the possibility of recession or concerns about the global economy. Those 4 industries were road and rail, which is essentially sort of the trucking and transport industry, semiconductor and semiconductor cap equipment, chemicals, and electronic equipment, instrumentation, and components. All 4 of those are classic cyclical industries whose outperformance suggests some optimism that is counter to what the headline and general sentiment is. So when we here at Royce see what we think is attractive fundamentals based on our own research, attractive valuation, and relative market strength, we tend to think that's an opportunity. And many of our portfolios have significant investments in these areas. In sum, what's the Royce outlook? We think this rally has room to run, and we think it'll be led by cyclicals.